Welcome to This Explainer. Today, we're diving straight into a fascinating, kind of brutally honest debate among 5 of the top YouTube traders. We're going to unpack the unvarnished truth about day trading, really stripping away those flashy thumbnails and big promises to look at what actually goes on behind the flashing red and green numbers.
So, we're kicking things off by totally subverting expectations here. What if the biggest secret in day trading isn't finding that perfect magical setup, but rather mastering the art of losing? I know, crazy, right? For beginners, the market looks like pure opportunity, like a quick ticket to a yacht in Miami. But as we'll see, the real secret to trading success actually lies in how you handle risk, your preparation, and, well, your own psychology.
Let's meet our panel. We're following a really powerful theoretical conversation between 5 distinct voices, and each one represents a completely different doorway into the market. We've got Ross Cameron, hunting small cap momentum and speed. Humbled trader, focusing on traps, patience, and the dangers lurking just beneath the breakout. Ricky Gutierrez, who demands clean patterns and super strict rules. Patrick Wieland, navigating the lightning-fast feedback of Nasdaq futures. And Umar Ashraf, who looks right past the chart and directly at the trader's psychology and journaling. Together, they aren't offering one perfect, holy grail path, but rather a harder, much more valuable truth. All right, section 1, the first move illusion. Ross Cameron absolutely hits the nail on the head when defining the trap here. He warns that real momentum requires specific ingredients, right? You need volume, you need news, and a clean break. Conversely, chasing is when you enter just because the candle is green and your heart rate went up. That's pure emotional reaction. You aren't actually trading the market at that point, you're just trading your own adrenaline. Building on that, Umar Ashraf makes a brilliant point. The first trade of the day exposes literally everything about you. It reveals whether you're acting from a calm, thoroughly prepared plan, or if you're just acting out of sheer desperation to prove something to yourself. You gotta ask yourself, are you calm at 9:30 a.m., or are you desperate for action? Because the chart is really just a mirror reflecting your exact state of mind. Moving on to section 2. Setups are not strategies. The traders make an absolutely vital distinction here. Listen, a setup is really just a pretty picture on a chart. It's an idea you can borrow from a video. But a strategy requires written rules, it needs context like VWAP or volume, and heavily defined conditions for exactly when you're going to exit. Literally anyone can memorize a pattern and click buy, but without the strict parameters of a strategy, that simple setup just becomes a really convenient excuse to gamble. So how do you know if your strategy actually works? Well, Umar Ashraf drops a profound truth about finding your edge, and that number is 100. Look, taking 10 trades, that's just emotion. Taking 50 trades might give you a little clue, but it takes reviewing 100 trades or more to actually prove a strategy is yours, and that it actually works. If you aren't tracking your data across 100 repetitions, you're not learning. You are literally just wandering in the dark. Which brings us to section 3, learning how to lose. According to our panel, the absolute best traders out there execute 3 exact steps. Step 1, define your maximum loss before you ever even think about clicking buy. Step 2, enter the trade. And step 3, honor that stop loss without a single question, no second guessing. They treat the defined loss as the literal price of admission. If you cannot accept that exact price before entering, well, you have absolutely no business taking the trade in the first place. And what happens when you don't honor that stop loss? You guessed it, revenge trading. Humbled Trader and Umar explain this beautifully. While one huge, devastating loss is obvious and loud, 10 tiny revenge trades are actually way more dangerous. It's like death by 1,000 paper cuts. Why? Because they slowly and quietly erode your discipline. Revenge trading means you've entirely left your process behind. You're no longer trading. You're just aggressively trying to defend your ego. Okay, let's jump to section 4, stocks versus futures. Now, small cap stocks promise this wild opportunity and huge percentage moves, right? But the reality is absolute chaos. We're talking wide spreads, dangerous traps, and unexpected trading holds. On the flip side, Nasdaq futures promise a really clean focus with just one single chart to watch. But man, the extreme leverage there will punish a sizing mistake in a matter of seconds. The big takeaway here? Neither market forgives emotional mistakes. The market that teaches you the truth the fastest is simply the one where you can no longer hide your bad habits.
Section 5, the YouTube trading trap.
This is where things get really interesting, because the panel openly admits that showcasing big wins and lightning-fast entries makes trading look dangerously easy. When education morphs into pure entertainment, viewers inevitably mistake speed for skill. It feeds this fantasy of an easy life, a quick escape from a 9 to 5, rather than teaching the harsh mathematical reality of risk management. So, what's the antidote here? The traders agree that to act responsibly, influencers must show the unglamorous realities. They need to show losing trades where risk was perfectly controlled. They desperately need to show the incredibly boring days where no trades are taken at all, proving that yes, patience is actually a strategy. And they need to show the tedious post-trade journaling process. Because if someone only shows you the green profit and completely skips the boring journal, it's not education. It's just a highlight reel selling hope. Finally, Section 6, the ultimate opponent. Ultimately, the market is just a ruthless mirror reflecting one of two personas. The gambler wants the market to rescue them from their life. They hide their losses and they demand thrilling, constant action. But the trader wants the market to teach them. They meticulously review every single loss, and they possess the quiet patience to just sit and wait. You really have to decide which one you are before risking a single dollar. Because at the end of the day, the trader has to face the one thing no strategy can ever remove: themselves. You aren't fighting the chart, you aren't fighting the setup, and you definitely aren't fighting the spread. You are fighting your own pride, your own fear of missing out, and your deeply human desire for an easy escape. The deepest trade you're ever going to make is building the kind of character that can face a flashing screen without losing self-control. Which leaves us with this final, provocative question. I want you to really think about this the next time you sit down at your desk, load up your charts, and think about clicking that buy button. Are you trading a plan, or are you trading a feeling? If you can't honestly say it's a plan, hey, the market's still going to be there tomorrow. Walk away, review your rules, and come back when you're ready to be a trader, not a gambler. Thanks so much for joining me for this explainer. Keep learning, stay structured, and I'll catch you next time.